Welcome to everyone. This week video will cover the SP500 in the gold market for the week of January 15, 2024. If you like this video, don't forget to click on the like button, subscribe and click on the bell to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. For the SP500, there is no change on the longer picture. For more details on the longer picture, I recommend to watch my previous video update. For that reason, I will start this SP500 update with the 20-week cycle. The 20-week cycle pointing down, this 20-week cycle low is still scheduled for the third week of February. At that time the cycle line, which should be used as support, will be at 45.77. There is a high probability the SP500 will form his 20-week cycle low around that price. We will have confirmation of the 20-week cycle peak when the SP500 will cross below the 80-day cycle uptrend line. The last trading signal was on November 17, when the market crossed above his cycle line at 44.78, giving a potential target at 48.52, or $374 or 8% of potential profit. The success rate is 100%. The 80-day cycle. I draw the 80-day cycle uptrend, the purple line, which will be used to identify the 20 weeks peak formation. And for now, the 80 days uptrend line hold the market. The peak for this cycle is expected around February 8, but technically the peak should occur before the February 8. It's possible during this 80 days cycle peak formation, the SP500 will reach his last upside target at 48.52. Then will start to decline and cross below his cycle line, providing a potential downside target, forming the low of this 80-day cycle around March 14. The January 5 low at 46.82 is the 80-day cycle low. This low was expected on January 4, so this low was 1 day late. The 80-day cycle low formed well above his cycle line. Now we start the second 80-day cycle of this 20-week cycle. This 80 days should be less bullish than the first one, he even can be neutral to bearish. The success rate is 100%. The 40 days cycle. Last 2 weeks, the SP500 trade on his cycle lines, using them as a support. And technically at the stage of this cycle, the market should cross below his cycle lines and provide a downside target. The peak to this cycle is expected to form on January 22, the red dashed line. The low is scheduled for February 8. Here are the cycle lines and their potential targets if the SP500 crosses cycle lines. The success rate is 82%. The 20 days cycle. The last 20 days low was on January 5 at 46.82, right on time. Last Friday the market crossed above his cycle line at 47.69, providing an upside target at 48.5589, or 86.89 points potential profit, or 182%. The 20-day cycle target is just $3 higher than the 20-week cycle target. Meaning 48.52, 48.55 should be an important resistance level. During the next 20-day cycle low formation, which is expected on January 22, the SP500 should find support on his cycle line. We will watch carefully at that time if the cycle line will be strong enough to support the SP500. If the SP500 cross below, this will confirm more bearishness coming to the market, like in the gold market, which didn't find support on his cycle line. The success rate is 90%. The 10 days cycle. On January 9, the SP500 crossed above his cycle line at 47.32 for a potential target at 47.82, or $50, or 1.06%. With a 47.90, on January 10, the SP500 made his target. The next 10 days cycle is expected on January 19. Technically the SP500 should find support on his cycle line, which is at 47.32. If the market crossed sharply below his cycle line, this will add some more bearishness to the market. The success rate for the 10-day cycle is 100%. For the gold market, I used the GLD ETF to analyze the market. On the monthly and the 40-week cycle, there is not much change, so we will start by the 20-week cycle. This 20-week cycle is still scheduled for the end of January to mid-February. The December 27th high is possibly the 20-week cycle peak, meaning the market should be sideways to down until end of January or mid-February. The potential target for the low of this 20-week cycle low, it's his own cycle line, around 182. The success rate is 100%. The 80 days cycle. The last 80 days cycle low occurred on December 11th. The next one is expected on February 17th, forming at the same time the 20 weeks low. The 193.18 high is probably the 80 days cycle peak. Last week the market crossed below his 80 days cycle uptrend line, the purple line. Then, if the crossing is confirmed, the 193.18 high will be also the 20-week cycle. In this case the peak occurred on the left side of the cycle, which is a short-term bearish sign. The 40 days cycle. If the 193.18 high on December 27, 2023 is the 40 days cycle, and if the GLD ETF cross below cycle line, this will confirm a high probability of the 20-week cycle peak has formed. For now the GLD ETF trade on his cycle line. If the December 27th high is confirmed as the 40-day cycle peak, we can expect the crossing will occur this week and form this 40-day cycle low around the January 14th. The GLD ETF cross below his cycle line on January 10th at 188.26 for the potential downside targets at 183.34 or $492 or 2.61%. The success rate is 100%. The 20 days cycle. On January 5th, the GLD ETF crossed below his cycle line at 190 for a potential downside target at 186.82 or $318 or 1.67%. On January 8th, the gold ETF met his target. The next 20 days cycle low is expected on January 20th. By crossing his cycle line so early, this confirms some bearishness coming in the market. Because at this stage of the cycle, the GLD ETF supposed to find support on his cycle line, and not crossing below before January 14th. This week the market should rally toward his cycle line, and at least find resistance, even if technically it's supposed to cross above it and provide an upside target. If the market find only resistance and resume his downtrend, this confirms the 20-week cycle peak has formed. The success rate is 93.75%. The 10 days cycle. The next 10 days cycle low is expected on January 17th. On January 2nd, the GLD ETF crossed below his cycle line at 191.20 for a potential target at 189.22 or $198 for a potential profit or 104%. The next day the gold ETF met his target with a low at 188.16. Last Friday, the gold ETF crossed above his cycle at 185.5 for a potential target at 189.89 or potential profit of $1.39 or 0.74%. Because the gold ETF opened with an upside gap, the target had been met right away. The success rate is 94.06%. In conclusion, the SP500 is certainly forming the 20-week cycle peak. The SP500 should be sideways to down until the third week of February, forming the 20-week cycle low. The gold market is on his way to form the 20-week cycle low in the next few weeks. If you need more information about the success rate, on the first update video of this year, I published the success rate table for the year 2023. This is the end of this week's video. Thank you for following me.